Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. Today we have some pretty big news from Tesla related to their deliveries for Q4 and their China run rate for the new China Gigafactory 3. Also, we've heard that Tesla has cut prices in China ahead of delivery, so we're going to talk about that in this video. And I'd also like to talk about one of the ways of looking at why competitors such as the Mach-E, the Porsche Taycan, and the I-Pace, for example, why their strategy isn't working to take out Tesla. But first, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. And if you found this video helpful and would like to support us further, please consider checking out our Patreon at patreon.com/themarketisopen. So Tesla stock moved up about 3% today and actually hit an all-time high of $454 intraday on news that it delivered a record-breaking 112,000 vehicles in Q4 of 2019. Now that's up pretty huge from the 97,000 vehicles they delivered in Q3 in a quarter where they also delivered a pretty hefty profit, albeit there were some currency gains in that quarter as we discussed in a separate video on this channel, and those gains will likely not appear again in this quarter. Nonetheless, this quarter was up about 15% more in terms of deliveries than the previous quarter. I think that helps Tesla hit $7 billion of revenue once again this quarter, which hasn't been done since 2018. Model S and X are creeping back as well. They're still a ways off from their typical 25,000 historical rate, though Model 3 has been on fire. We're hearing and seeing that showrooms have been empty because they sold the vehicles in the showrooms. Now, people always see this as a negative thing for some reason. They always say that Tesla delivered a huge amount at the end of 2019 because they're pulling forward demand into 2019. I don't think that'll be the case, especially with the China factory ramping up. But at the same time, I think people were working major overtime to get all the cars sold that they could this quarter because of an $1,800 tax credit in the US that disappeared at the end of last year. So in total, Tesla delivered 367,000 vehicles for the year of 2019, which is up 50% from the previous year. That's also actually in their range of 360,000 to 400,000 vehicles, which nobody thought that they could do, and that's one of the milestones that they were able to hit. Now, if they can simply maintain that delivery rate for each quarter of 2020, that would imply a 22% increase on its own over 2019. But I think they will do much better in 2020 because the China Gigafactory 3 is online, and Tesla says that they've already hit an astounding 3,000 vehicle per week run rate in China. So we've heard at the end of 2019 that they were producing maybe a run rate of 1,000 vehicles per week, which was their initial target, and in itself was pretty amazing given that the factory had just started ramping up. Now it's been 3 days later, and Tesla says they're capable of doing 3,000 vehicles per week. Now, first off, that's not a sustained 3,000 per week. In order to get that run rate, they simply need to achieve about 430 cars in a single day to show that they're capable of hitting 3,000 vehicles per week. But it took Fremont months to achieve that. Now, 3,000 vehicles per week is also the quote-unquote production capacity for the China plant. Clearly, the capacity might be a little bit higher than we thought if they're already at the capacity before delivering any cars to customers. So there still seems to be room to boost that capacity. Tesla also delivered 15 vehicles to employees a few days ago, and on January 7th, they're going to be delivering vehicles to actual customers. They've already produced just under 1,000 saleable cars. Maybe some of the ones that we've seen sitting around in parking lots aren't all for sale, but it's amazing how quickly Tesla has hit this milestone. So in our predictions for 2020, we estimated that Tesla China would produce under its 150,000 vehicle per year capacity. However, if it's the beginning of January right now, and they're already capable of hitting 3,000 vehicles per week, maybe not fully sustained, but they're getting there, it's only a matter of time before that stabilizes and surpasses the 150,000 capacity. So perhaps they underestimated capacity, and they'll continue building out the China factory to add much more capacity. Billionaire investor Ron Barron has said that their internal target is about triple that number. Tesla actually plans to make about 500,000 vehicles per week from the China Gigafactory. Perhaps that includes Model Y, though. By the end of the year, I wouldn't be surprised if Tesla China gives Tesla an amazing Q3 and Q4, something that Elon Musk has said would likely happen. Now, of course, the China Gigafactory did start ramping up production in 2019. They didn't sell any cars in 2019, so you won't see any of those costs appear in 2019 because you need to match the costs with the revenue according to accounting rules. So those will occur in 2020. Tesla China will probably take a small loss when they ramp up because it is very expensive when you're only producing a small number of cars, even though they seem to be ramping up quite quickly. But a small number of cars means that there's a huge amount of expenses that went into those few cars, whereas when they start scaling up, you'll see the cost per vehicle start to come down. Okay, so we've also seen some news of price cuts in China. They've cut the price of the Model 3 from about $50,000 to $46,000 US, even before they started deliveries. So let's look at the pros and cons of this. So one pro of this is that it signals that production might actually be quite high and is going smoothly, which is something that we've already heard of today with their 3,000 vehicle run rate. We were expecting Tesla to cut prices once they started ramping up, but it seems like the ramp up is going quite well. Second thing is that it does create a lot of buzz. You're seeing tons of articles. Consumers in China are probably really happy. Oh, the price just came down, so it's time to go buy a Tesla. Like, this is a great deal. Plus, we were hearing rumors of Tesla about to cut the price. So I think now that Tesla has cut it, people are sort of less skeptical and they're going to go buy a vehicle as opposed to trying to wait around for a price cut to happen in the future. Now, at the same time, this strategy does give automakers a run for their money. Like, surprise, they thought the price would be $50K, and now their competitors are charging, their competitor being Tesla, only $46,000. Like, Tesla will likely have pretty good margins at these levels as well, but it should increase demand for the vehicle at this new lower price. Okay, some of the cons. So analysts now need to adjust all of their models because they think that Tesla won't make as much money now that the vehicle has dropped in price by about $4,000 per vehicle. I don't think that's correct, but the analysts might do that anyway. The second thing is that bears will say that there's actually no demand for the vehicle, so that's why they need to cut price. Actually, the price of the vehicle was a little bit high to begin with. If the car is easier to manufacture in China and it's cheaper in every way, then selling at the same price as they were in the US would mean that they'd be really milking it. Unfortunately, they were actually selling way higher, about $10,000 higher than the US price. So actually, by cutting price, they're getting closer to the US vehicle price, which is very profitable in the US, and you would expect it to be even more profitable in China with all of the cost savings. So I also don't think it'll be sustainable to keep the prices high for very long. So I think it's a good thing that Tesla did cut the price. But that said, analysts would believe that you'd have a lot less margin by cutting the price. That's true. However, I think Tesla will sell more vehicles and still, again, maintain those margins. Tesla has been delivering Model S and Model X in China since 2014 and has been delivering Model 3 to China since the beginning of the year. So they're going to continue to deliver higher-end Model 3s in China from the Fremont facility in California. And that said, Tesla isn't new to the Chinese market. And also their team was assembled locally. So I very much trust that they know what they're doing in China in terms of the pricing of their own vehicles. Everyone gets scared when they see price cuts, but if that increases the volume sold, then that's what Tesla wants, and they also want to get everyone in the world off of fossil fuels and onto electric vehicles. If you look at Apple, for example, as an analogy, because everyone has a smartphone and phones aren't breaking as often and are lasting longer, the replacement cycle simply isn't as fast as it used to be for Apple to continue making such high margins. Also, perhaps the innovation has slowed, or rather it's not as prominent as it used to be. Either way, Apple has been selling less phones, so they had to raise the price, which caused them to sell less phones, sort of like a vicious cycle. Actually, they ended up doing a little bit worse, and Apple had raised the prices so much that people were skeptical to buy such an expensive phone. Like, who wants to buy a $2,000 phone? Well, apparently a lot of people, but not enough. At the same time, what if the phone was $200? Then everyone would buy it, Apple would make no money, and they wouldn't be able to keep up with demand. So it's important to find that middle ground, which I think they did, or they're doing, through trial and error. So I think Tesla has been doing the same thing over time, and just because you don't charge the highest possible price doesn't mean you can't maximize revenue. Also, Tesla has a pretty big advantage in China. So far, they're the only automaker that has a wholly owned car manufacturing plant in China. It's amazing that GM, Ford, even Volkswagen, and other large companies need to partner with another Chinese company and give away over 50% ownership of their joint ventures in order to operate a plant in China. Somehow, Elon Musk was able to push for a China plant, which shows China's commitment to EVs. I think this also shows the seriousness of competitors who are huge players with very deep pockets. They have tens of billions of dollars on their balance sheet of each automaker, yet they don't have a vehicle that's capable of competing with the Teslas or any real game plan, especially in China. The other automakers seem to be too busy trying to attack Tesla and come out with the so-called Tesla killer instead of trying to tackle the real problem, which is the 97% market share of ICE vehicles. So I think the other automakers are using a strategy similar to a Mario Party game called Stamp Out, in which players try to cover the board with their color stamp. If you want to win, the best strategy is to make someone else lose by following them around and covering their color with your own. That way, when the time runs out, they have nothing to show for, and the board is all your color. That seems to be the strategy of the automakers. They think that they can sell their own electric vehicles to the same people that already just bought Teslas. That would be great. If you can replace each Tesla owner with an owner of a Mach-E or a Taycan, that's brilliant. That would definitely defeat Tesla. Except it doesn't seem to be working. It's a bit of a paradox because Tesla designed a car that's better in almost every way, performance, efficiency, and software, cost of ownership, than all other ICE vehicles on the market. At the same time, the other automakers need to build a vehicle that's somehow better than the Tesla or the Model 3, but they also don't want to disrupt their current and very profitable ICE vehicle market, so they need to build something that's worse. So how can they possibly build something that's better than a Model 3, which is better than their ICE vehicles, but also that doesn't disrupt the ICE vehicles, so it needs to be worse than the ICE vehicles? It doesn't make a lot of sense. And I think that's part of what's holding these other automakers back from really competing in the industry. As soon as they start selling electric vehicles, it'll take away from their current and very profitable internal combustion business. So I think the Gameboard is actually quite the opposite. Currently, it's filled completely with ICE vehicles from all of these different automakers in the world. But then we have Tesla that came along, and Tesla's building electric vehicles which are replacing the ICE vehicles. So it seems that Tesla is the one stamping the other automakers out. Alright guys, I hope you enjoyed this video. Thanks so much for watching. Please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. Don't forget to smash the like button on this video and also hit the bell button for future notifications.